Hello, everybody. Welcome to today's story. Hope everyone's doing well. We all knew what has just happened was going to happen, so there's no surprise there. It's actually been very gradual, very planned. But let's try to get to the heart of exactly what this is about. So this story today touches on all the stuff we face and how it ties back to markets and how we can prepare a little bit. What we see others doing, others seeing, where we see the stock market potentially going, what's getting hit, what's not, and where is the safe haven, if at all, and what are the master plans out there by others. So let's jump in. Thank you all for being here. Thank you to the moderators in the chat as well. And at the end, we'll open this up to some live Q&A. So first of all, Russia is locked and loaded. It's going down. No surprise. It's all more or less factored in. Stock market was a little bit weak today. Some good deals to be had, but we're still waiting. I think there's more shoes to drop. And the question is, how will this impact our stock market investments, our crypto investments, inflation, de-dollarization, stagflation, and more? So let's go. Math, money, and freedom. And disclaimer, none of this is financial advice, as you know. So before we jump into the big story, let's talk about some good crypto news. So Luna rallies, VCs buy $1 billion worth, and Terra avoids Ukraine concerns, rallying 18% in 3 days. Can Luna reach 200? Big story. So again, the good news, I always like to bring in a little bit of good news when we can. Rebound to Luna, and I love the LFG, the Luna Foundation Guard, play on crypto terms, of course. Now, a nonprofit organization is the LFG, and they managed to find a way to pull out some existing tokens and sell $1 billion worth to bring more capital and liquidity to the platform, which is great. I was very worried about liquidity over the past 2 or 3 weeks, but they solved that. So now I am comfortable again. Bought a little bit last night at 55, and we'll wait and see what happens. So the venture capital firms are in there, like 3 Hours Capital, Suzu, Jump Crypto. Jump Crypto is the trading firm behind Wormhole and other stuff, and a couple of other platforms came in. So again, $1 billion like that. So that's good Luna news. Let's look at some other good news. I did a video back in December on follow the developers, follow the money. And if you're interested in long-term development, you have to look at assets. You look at how Google was built, how Tesla was built, and how the best chains are built. It's all about building and investing for the future, not short-term wins. So this chart was pretty stunning. Love it or hate it, Solana is building for growth and for long-term. And despite the weak price action, which I'll talk about in a minute, Solana is still the fastest growing project in the market out there. And we know it's 3,300 times faster than Ethereum. Solana has 400 dApps running, not 1,400, 400 dApps running, and 300 more being built as we speak. And it also supports wallets, DEXs, a whole bunch of DeFi products. It probably has the most breadth of any ecosystem out there. And since 2021, developers grew exponentially by a factor of 5. Again, just in 2.5 months, the amount of development has gone up 5x. That is pretty staggering. Now, in comparison to some of the other players, Ethereum is in second place, very close to Cardano. They would be the purple and yellow lines there on the chart. And Polkadot, fourth. Luna was down there at number 8. But again, very interesting to watch this. But before I jump into all the other stuff, I want to talk about a question I get all the time. Again, people say, oh, Solana's down, it's really bad. Well, I put together a list of all the smart contract platforms and analyzed how much they are off their all-time highs. Remember, we got into Solana at $20, and it's still up. Like today, it was in the 90s for a little while, and it's weak right now. This was just pulled all the data. You will see here. The average smart contract platform is 67% off its high. But you have to understand, Solana and Phantom and Luna are ones that exploded thousands of percent. The higher you go up, the higher you fall. For those of you who know the old Bitcoin days, you remember 85% retracements. Here we are. Solana is down. I don't even know why I'm defending Solana, but I feel I have to because everybody keeps on thinking I'm the help desk. Anyway, Solana is down 64% off its all-time high. It needs to it needs to have 199% gain to reach its all-time high again. So that's a 3-bagger, as they call it in the old school. But other names out there, if you look at Algorand, it's down 83% of its all-time high. Loopring, 80%. Cadena, 77%. Tezos, 75%. Celo, 74%. Chainlink, 74%. Quant, 74%. It looks like 74 is a common number. Elrond, 72.3%. Cardano, 71%. And Cardano didn't even move. So think about that. It didn't have an explosive year. The Cardano price action is lower than it was over a year ago. So everybody just put things in perspective. What's also interesting to know here, obviously the big dog, Ethereum, only down 46% from its all-time high. Bitcoin I threw in there, 45.3%. And Terra Luna is the least damage, 41.8%. So everybody, please, when you look at crypto, look at things in perspective. Like look at technology stocks. Look, we'll talk about Palantir later about how much that's down and what's happening. But again, just look at things in perspective is all I'm going to say. Now, let's talk. We were planning a different video for today because of this tweet that came out. But one of the things that really, really concerned me is what's happening up in Canada. And I've been a little bit vocal on my disdain for Trudeau up there. So nothing against Canadians, but I think the way he has completely botched the handling of this entire situation is just catastrophic. And he should resign and go somewhere else and put somebody else in his seat. Anyway, the Canadian regulator for the Ontario Securities Commission, probably like the SEC, alerted the Canadian Mountain Police and other federal authorities to tweets concerning Canada's Emergency Act posted by Brian Armstrong from Coinbase and Jesse Powell from Kraken. And the report was like, hey guys, these guys are urging people to use custodial wallets and advocating the use of non-custodial wallets to prevent funds from being frozen. So it's like, it really is disturbing. So tomorrow's episode, which is supposed to be today, was about the key wallets you need to own for all the different purposes and which ones are the best for exactly this reason. What you need to have to arm your self-sovereign state. So we'll cover that tomorrow. But anyway, none of that. One of the things I was very impressed with Jesse Powell, though, was this. This was his tweet when he was asked about if he was asked to confiscate somebody's crypto. He said yes. And it says, will happen, and 100% yes, we will be forced to comply. If you're worried about it, don't keep your funds on any centralized regulated exchange. But the piece that really got my attention, he says, we cannot protect you. Get your coins cash out and only trade peer-to-peer. So he runs a centralized exchange and he's telling people, go to a decentralized exchange. So if anybody's interested in learning more about how to protect your self-sovereignty tomorrow, what type of wallets to use, and further we can dig into DEXs and how to use them, let us know. But I think the world is changing so fast right now, we need to be on top of things to protect ourselves. Not only the market's changing and the price action changing, but all the other stuff that's going on is ridiculous too. All right, let's talk about the big elephant in the room. And I promise not to spend more than 60 seconds on this. But the story today is not all about war. It's about financial services and markets and how they tie back to the threat of war. So there's a reason for every little piece of this story. The real issue was Zelensky, who upset me about 2 weeks ago. He kind of joked about the war situation. And now people have already died on the front lines. At least one that I know of is already dead. So, you don't joke when people's lives are at stake. Anyway, on 22nd of February, which is only yesterday, he joked. He said there will be no war. Crazy. Anyway, and the number one issue really that we're going to talk about today is inflation and the Fed and war and how it's all going to have a huge impact on what's going on. Because we've seen this play out before. History repeats. You always know when there are financial situations that are problematic, big macroeconomic problems, war tends to follow. It's just the nature of the world. And the situation in Ukraine will make things like inflation worse. Oil prices will go up. Natural gas prices will go through the roof. Probably going to double. And that's going to affect our brethren in Europe and other places. And this will increase the inflation concerns that are already terrible. Now let's talk about the Ukraine state of emergency. A couple of interesting things happened here. And this is the new type of war we live in. So Ukraine did report a denial of service cyber attacks on key government websites and a major bank. We know Putin is very good at cyber attacks. He's been playing with national elections all over the world. And the government declared a state of emergency, cyber attacks. And there's Zelensky, our friend, who was not joking anymore. I hope not anyway. He suggests they are part of future political and national conflicts. And that is where we are. That's why I mentioned the soft war, cyber warfare, whatever you know. And the other thing is, ever since the C19 situation, we've all become much more dependent on the internet to do our daily activities. And this has much more of an impact than ever before. So be prepared for that. Second of all, and this also ties into things like self-sovereignty and securing your own crypto, because what's happening in Canada, what's happening in the Ukraine, it's all happening at the same time. So the UK, I touched on this briefly yesterday, the UK sanctioned 5 Russian banks and put a travel ban, which is a complete joke. I know Biden is thinking about putting sanctions on Putin's girlfriend, believe it or not, who's a former gymnast. So it's just, that's not, Putin knows this is going to happen. And this is why we believe that some other stuff's going to happen too. That impacts the markets. So anyway, asset freezes, travel bans, sound familiar, blah, 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 blah. Seems to be the weapon of choice for governments. It looks like we're floating from C19 straight into a war situation. Now, this is the piece that ties into all of us. This is the nuclear option called SWIFT. Fearing crypto and China, the US hesitates to pull Russia's SWIFT access. So the sanctions are like half-hearted little smack on the wrist. Putin, don't be a bad boy. You're going to be a good boy if I treat you nice. It's just, I just can't believe how nobody is standing up to this guy. Anyway, US backtracked on using SWIFT to block Russian access for international payments because the US is probably afraid if they do that, the place like China and Russia will learn how to survive without the dollar, without SWIFT, and that'll bring about de-dollarization of the world, which means the US won't have control over things like sanctions. Cutting Russia from SWIFT could be the first domino in a sequence of events to bolster China's alternative digital payment systems. We know as well they rushed through some crypto law as well to make it all happen. Maybe this is the way they can bypass sanctions. So it's all beginning to make complete sense very quickly. So what's he looking to do? Boom, de-dollarization. It's no secret and no coincidence at all. The whole sequence of events, this has been planned for a long time. You could even argue that the Ukraine is just kind of a pawn in this whole game. They have bigger eyes on bigger pictures. China and Russia have been trying to reduce their use of the US dollar to de-dollarize their economies for a long time. Last year, every single dollar of treasury asset the Russian government got rid of. And the primary reason for de-dollarization is to shield their economies from US sanctions and reduce the impact of US economic and monetary policy on their own economies. All related. Think about that. So imagine if you personally had $1 million cash in your bank account and it's debasing at 15%, is that a good thing? No. If you're in Russia and you got $1 million in your bank account, is that a good thing? No. Debasing at 15%. They need to reduce the dependency on that. And see, it's all related. All you could argue goes back to money printing. Now, CTO Larsson, big shout out to my buddy over there in Sweden. He came out and he has a theory that Bitcoin breakout should follow the gold breakout. Super interesting. And he was right about the gold breakout. Gold is nearly at a 1-year high right now after 11 years of sucky performance. And you can tell when gold is going up, the macro backdrop is war. It's typically what happens. Anyway, we'll see. But we'll see if CTO Larsson's theory holds. And this ties into some of the ideas that we've had that basically, how many safe harbors are there to store your money, your assets? Gold, maybe Bitcoin, maybe decoupling, as I spoke about for the other day. So let's look at gold stock chart. I don't think I've ever showed a technical chart for gold. And I will do a collaboration with CTO Larsson real soon. So if you have burning things you want us to discuss, let us know. But we've got very complementary approaches to the markets. So I think every collaboration we do will be excellent. But here you see the gold is closing in on that 1 month high, I think 1916, was the high on 21st of June 2021, and we hit about 1909, 1910 today. It could even be a little bit higher right now. So that's where gold is. But let's look at gold versus Bitcoin. This is what's important. I told you there's a method to the madness. So if you look at this over the last year, you can see a couple of things. Number one, Bitcoin is the orange line. Gold is in the Bollinger Band in the middle. And you can see typically when gold goes up, Bitcoin goes down. Gold goes up, Bitcoin goes down. Gold goes up, Bitcoin's already down. So guess what's going to happen next? This is the interesting thing. We're missing that third step for Bitcoin. We don't know where it's going to go. I think it's close to bottoming. Maybe we hit 33. Maybe worst case scenario, we hit 29K. If things really, really fall hard, we could get there. But this is interesting. So the second thing is you can see from the orange line, Bitcoin is a lot more volatile. Let's see how much it goes. And third, you can see the delta so far for the year. Gold is up 5.9%. Bitcoin is down over 20%. A rare occurrence. Again, gold has sucked over the last 11 years, but here we have that inverse correlation. What happens if they become correlated? So super excited to see if CTO Larsson is right. Could be a safe harbor. Now, speaking of that, in support of that, this is an article from BitMEX. Artificially low rates, we know, have taken economic fuel away from real, sustainable, profitable, and humble companies. Instead, we're left with loss-making tech startups, master of the universe VC funds, meme stocks, CryptoPunks, metaverse real estate bonanza. For those of you who are buying metaverse property, there are very few safe havens left. And this article is, inflation is here, it could get worse. But Bitcoin, Ethereum, and gold investors could be the one to benefit. So we'll see. We'll see if this is right. I personally have not sold any Bitcoin. In fact, I've been buying on the way down. So that's what I'm thinking. Now, the other interesting thing is what's going on. So our leaders all around the world controlling the narrative in advance. This is interesting. Biden today and yesterday spoke about defending values will cost. Anyway, know what that means? Drop a comment below. Does that mean the money printers are going to start firing up again? Yes. Does that mean they're going to try pin inflation problems on war in the Ukraine? Yes. This is what they do. But the problem is now the whole world is so much smarter than any time in the history of the world. But we'll see. It was typically historians in the past that knew this. So back to Russia, for example. This is another piece related to the economy. And as you know, this article here from Javier David, he said, Russia, Ukraine may stir the dreaded stagflation beast from slumber. From Morning Brief. Big thank you to Sanjay for sending this to me. So Russia, obviously being a nuclear power, permanent member of the UN Security Council, and a major oil and gas producer, is looking more hell-bent on reconstituting the failed Soviet Republic and bringing its neighbors back into the fold, Ukraine being first. And we'll see. Extreme risk aversion is typically the order of the day when this type of stuff happens, and you're seeing a lot of crazy things happen. Now, the dynamics are igniting oil prices, gas prices, commingling with inflation that's already catastrophic, and it refuses to come back to earth, and it won't. As I always talk about, we haven't seen the salary inflation hit yet. That is yet to come. When people start realizing, hey, I'm earning 15% less than last year because my rent is up 20%, my food is up 25%, a beer at the restaurant is, I was somewhere the other day and I couldn't believe the price inflation. I think I was actually on my bicycle and I was riding by a fast food place on my way to Starbucks. I shouldn't say that. I shouldn't drink that coffee, but I was desperate. And there was a meal. It was like, I don't eat junk food, but there was like a hamburger meal with fries and a drink. And it was like $11.99. It's like, I remember when they used to be $2.99. Anyway, separate rant. That was crazy. And it was a garbage junk food place too. But it's all wreaking havoc on policymakers' Herculean efforts to keep price pressures from crushing consumers. If we get stagflation, that is inflation with negative economic growth. And that is the kiss of death. That means they're going to have to do things like lower rates and increase money printing again to fire up the economy. As I said, paint into a box. That's the trigger that could happen. Now let's look at a little bit of history. This is 2018 versus 2022 on the S&P 500. It looks like a complete redo. So if you look at the 2018 line, it's gold and blue. is where we are 2021, 2022. You can see it almost tracks perfectly. Now, if this follows through, we could see an S&P 500 hit 3840 sometime next month. So fingers crossed if this pattern holds, and believe it or not, it's been holding pretty well so far. So FANG index got hit really hard. Consumer discretionary is the weakest sector in the S&P, absolutely crushed. And energy has been surviving because crude oil, etc., is up. Gold is edged up a little bit, 5% for the year. Woohoo, for all the gold bugs. They deserve a good year every 11 years. And it could go a lot higher. So people are talking about $3,000 gold. But if that happens, I think that'll be a good thing for Bitcoin. Pretty convinced. Now, the recent damage is particularly acute with tech and consumer discretionary, as I mentioned, where 9 out of 10 stocks are down more than 10% from their 52-week highs. And other names are down, I think 80% of stocks are down over 20% from their highs. So it is a very rough market out there, kind of like smart contract platforms, as I showed, distance off all-time highs. Of course, crypto is a lot more volatile, but it goes up a lot more. Like we had many names went up, 2,000%, 3,000%, 10,000% in the last year and a half. So they have to come back down to earth. It's normal, but that's why, go long vol, as Greg Foss says. So that's the S&P. Now, I charted out what I believe the S&P Max War Downside is. The 3840 here is exactly 10% from where we are today. So if you're in crypto, you can live with 10% volatility. But obviously, the more volatile equities in that bag will fall a lot faster. So we'll see. We saw tremendous weakness in things like Tesla today and a bunch of others. So let's talk about Palantir as one stock. So Cathie Wood appears to be cutting ties with the big data analytics and software firm Palantir. And she dumped 11.76 million shares of the stock yesterday, I think, or today. And they dumped another 30 million as well since February 17th. And the stock is 77% off its all-time high. That sounds very much like a crypto, doesn't it, at this stage? It's just hovering above $10. And it's funny because when it IPO'd, it came out at $10.40 a share. And the other thing that's interesting, if you read between the lines and look back at history, I always try to remember the IPO price because I don't buy IPOs, but I watch them very carefully. But you could also imagine that Cathie Wood is largely responsible for Palantir peaking into the high, nearly the 30s because she was buying up so much. But she did it all wrong. She bought high and sold at the bottom, which you don't do, everybody. You wait, and you buy low. And then you wait, and you sell high. Anyway, interesting Palantir news. Now, real estate news a little bit. This also hit the markets a bit today. Mortgage rates are up 35% over the last month. And there's been a 13.1% decline in mortgage applications. But home sales are still exploding. But they will slow down. There's always a lag of 45 days between kind of mortgage applications and buying and the market and the activity. So we'll wait, but it is putting a bit of a dampener on real estate prices in the US. So for those of you who are kind of new home buyers waiting to snipe your opportunity, with the combination of war, high mortgage rates, low demand, it could be a time. So not real estate investment advice, but just these are times that you buy, the times at least typically that I buy. And finally, the Chinese real estate bubble is getting worse. They have huge concrete ghost towns that make the Chinese real estate bubble really visible. In fact, some of these buildings that are in the background there, they were built, half finished, and then demolished. So, and many people, many poor people in China are trapped. They put deposits down. They paid for half of these unfinished homes, places just outside of Shanghai, Guangzhou, stuff like that. And it is just very, very sad. So feel for those people that are stuck in that real estate bubble. Remember, always keep some dry powder, always be safe. And if you are investing in anything, make sure you do your due diligence and make sure it's not a bubble. Okay, so with that, I'm going to take some questions. I haven't done that in a while. And I want to thank you all for being here. Let me switch camera. All right. I think I'm taking questions. Somebody should pop in. I'm going to look at the Bitcoin price in the meantime. Woohoo. Wow. Bitcoin's gone up $196 since I started. I put this little clock on so I can monitor it as I go. And there should be some questions. Yes, there are. A big thank you to K8 for managing all the questions. Luke Broyles, Long time no see, buddy. Hope you are well. Well, we know this is Luke Broyles' question, not me talking. We know the Fed doesn't want to cause a recession, but they have before. What are the odds they make the blunder of raising rates, crashing everything? Well, right now we have a third dimension on top of inflation, economic slowdown, and everything else. Before I talk about the third aspect, which is what we've just discussed, Ukraine and using that as an excuse for inflation, that as an excuse to delay increasing rates, that as an excuse to print more money, we'll see. But the problem is we are in an election year, so the Fed and the president are in cahoots because they need to retain control, because at the end of the day, that's what politicians want to do. It's all about control first, people second. I think that might be very politically incorrect to say, but that's what I see. Anyway, so I think Jerome Powell, I think the reason he got a second term in office, God knows why he took the job, but I think it's because they trust each other and they'll do the right thing. And they know each other. They know how they work. And this is a very sensitive year up to November elections. That's why I think the next six months could be gray clouds. Like, what's Jerome going to do? But he's also very good at signaling what he does. So he puts his smoke signals out and guides the markets. He doesn't want to rattle the markets. But now with the stuff in Ukraine, that's put an added dimension into the equation, which means I think they need to be even more careful. So I think, Luke, I have faith in Jerome Powell. I actually like the guy. And we'll see. I can't see, there's people at Merrill Lynch and Morgan Stanley and JP Morgan saying they're going to raise 7 times. There's no way they can do that. These guys don't do the math, because if they do, they absolutely crush economic growth. They absolutely slow unemployment or employment growth and etc. So I don't see it happening. MT, would you prefer to stake Sol on Exodus or earn yield on Celsius? Interesting question. So I did something this morning, which is kind of interesting. Well, I did something 2 weeks ago. I was staked on Everstake, and their headquarters was in Kiev in the Ukraine, and I was worried about the war, so I pulled my stake and moved it to another staking provider. Also, what I did today, I swapped Bitcoin for Solana on Celsius. I tried out the swap thing, and we'll see how that goes. Which one will be the faster horse? We'll see. So I have a whole bunch of numbers and a whole bunch of data that I'll be monitoring very carefully. But right now, I will be earning. I used to earn on Exodus, but I moved to Everstake. Now I'm on Bison Trails. Bison Trails is not the highest return or the lowest fee, but it's the safest. And that's where I want to be in these times. Safety first. Asset preservation first. Alpha second. Remember that, everybody. So right now, I'm doing Bison Trails, and I'm earning yield on Celsius with my Solana. So thank you for the question. It's funny because I just did it this morning. Duck Kiwi. Time to go all in on Tesla now. Well, you never go all in on anything. I was waiting for it to bottom. I covered half of my shorts on Amazon today. I was waiting to go in on Tesla, but I think we're not out of the woods yet. And I think there's a little more downside to come. But I'm ready. I've been waiting for this moment now for 2 months. And I'm just waiting for the capitulation event to happen. But I've been nibbling on the way down. And so much stuff is looking so cheap right now. I mean, it's ridiculous. So we are spoiled for choice, but I think there's more downside to come. If we do get to that 3840 level that I spoke about in the S&P 500, that's when you go all chips on the table. But remember, the high PE ratio stocks get hit the hardest, even though they are the best value. Like Google is a value stock. It's been holding up real tight. Nobody wants to sell that with the 20-1 split coming. But Tesla got a huge hammer today. Amazon got a huge hit today. And a lot of other names. So Crypto Papi. Sorry, Duck Kiwi. Hold. Nibble. Get a third now. Maybe 50% of what you wanted to buy. And then wait for the rest. You know, I do believe there's more shoes to drop. Peace is a long way off. Crypto Papi. How does Bitcoin gain value if used as a currency? Is it because nations will buy and keep as a reserve? Could Bitcoin be the global reserve? So that's it's kind of, think of it still as, I did a tweet the other day and I spoke about the evolution of Bitcoin. Let me see if I can pull it up actually, because I can explain what I'm trying to say much better. But there'll come a time when Bitcoin will be that global reserve. Let me pull this up, see if I can share. Sometimes things pop up. Yes, well, that worked. So if you see this very carefully here, Bitcoin narrative began back in the day as eCash. Then it turned into cheap payments. Then it turned into 2014 narrative dark web payments, which is like FUD stuff, which is still spreading today. Then 2018 digital gold. That was a huge move. 2019, the years aren't exactly precise. 2021, the reserve currency status narrative hit with El Salvador, and there's more talk of that as well. 2022, I believe censorship resistance will be important because of what's going on in Canada, Russia, etc. And 2024, maybe 2026, 2028, then we'll be talking about the literally global reserve asset. That'll come later. So in the meantime, by the way, if you don't follow me on Twitter, do so. I only started a few months ago, and but it's a place where I can say what I point some things out that I think are good to talk about without getting too political, of course. So I think when that happens, the more adoption, and this is why I'm so fascinated by Bitcoin, is it's so scarce, and it's so hard, and we're so early. So we'll see. There is somebody buying $2 million of Bitcoin every couple of hours. I have a funny feeling it's somebody in Russia, and I believe Russia is building up their reserve of Bitcoin. If that's the case, I have another concern. I hate to go down this rabbit hole, but I fear. No, I'm gonna talk about that later because that's way too far out there. But again, the more adoption, the better it is. It doesn't matter if it's used as a reserve asset, which is better, or a currency to spend. Not really optimal for that just yet, but all the tools are coming to make that possible. So that's what I see happening. So thank you for the question. Alex, we went from Plan B estimate of 100K Bitcoin, now crypto winter in just a matter of weeks. It's frustrating. Where are we headed? Also, do you have a solid price range for end of year ballpark? So nobody has a crystal ball. Everybody got sucked into 288K, 250K, 220K, etc. I remember I was the most conservative with like 98K or 89K or whatever it was back in the time, and people say, "Oh, that's not interesting buying Bitcoin if it's only going to go that high. I'd rather play with a meme stock like Doge because that's going to $100 or XRP." They were funny times, but we only got to 67K, which actually is not that far off 98K. Now, we don't know where this is going to go today. I don't know what Gary Gensler is going to do, but if he approves a spot ETF in the US, that'll bring a straight explosion, probably to $100,000. If we get another sovereign nation, there was talk of Mexico today, making the currency in California, a whole bunch of others. California is the 5th biggest economy in the world. Just think about that. That would be actually bombastic. So this could happen. And if you look at, again, as I call the drainage on exchanges, it doesn't take a lot of money to move. And looking at the transactions on chain, big money is buying. It's 80% institutional. And we'll see. So long-winded answer to your question, Alex. I don't know where we're going to go. 90K, that would not surprise me. We'll definitely smash through the all-time high of 67K, 68.8K, whatever it was. We'll blow through that, but we have a storm of stuff. Now, if the inflation narrative, which I didn't show in my previous chart, if the inflation narrative comes to the fore, like digital gold, like back in 2018, 2019, if that happens, game over. Look at the strength of gold right now. If CTO Larsson is right, mentioning him for the third time, if he is right, we're going to go crazy too. Now, in terms of Solana, I analyze this thing every single day. I debate people every day. I'm going to give up trying to convince people. Per all the metrics we look at, everything, nothing paints a better story. Yes, it's in beta. Yes, it had an outage in September. Yes, it's been congested 3 times over the last 4 months. But look, it's been heavily developed, built upon, etc., and widely adopted. And it's easy to build on, easy to integrate, slick UI. Go play with some of the UIs and some of the other applications out there and compare it to Solana, compare the slickness of the integration with wallets and DEXs and dApps and AMMs. It's just, it is, I think, the most impressive. But Ethereum drives that market. If Ethereum goes to, like if Bitcoin goes to 100 grand, no doubt in my mind, Ethereum will go to 9,000. And if Ethereum goes to 9,000, that means Solana should be 20% of the market cap, which take it to at least 450. If we don't, that means we get to about 250. So it's all a function of the mothership, and that's the way I look at things. So we need to be prepared for all circumstances, but I continue to buy into things like Luna, Phantom, Solana, because I believe they are winners. Santiago L, how are you? Our friend in Colombia, I think. If Bitcoin and Solana have positive cash inflow, why do they keep going down in price? You show us every week the inflow is positive. It's institutions are buying, but retail is selling. Retail have given up the ghost on Solana. That's why I always follow the smart money. Retail get very impatient. There was somebody sent me a video from some guy today, coin something or other, saying, I used to believe in Solana. I was a total Solana bull, but I've given up on Solana and I sold my stake. So you got people like that saying, I'm selling out, and that's it. But we're finance here. We look at quant, and we look at it more than anybody else. We don't look at stories of an outage or somebody setting a validator, which has happened in all chains, by the way. It's not just Solana. So again, speed, cost, adoption, integration, development, you name it, all the factors. The only area of the 20 that we look at where it's weak is TVL, because they don't incentivize you at 20% APYs. So that's what I see. Santiago, thank you for the question. AlphaJester, do you believe the 4-year Bitcoin cycle is dead and we will just trade on growing market value from here on out? Yes. So I believe there was a question above mentioned crypto winter. I believe crypto winter is dead. I believe we're just in cycles. We are now in a bear market, clearly, obviously. 50% in crypto for me is the definition of bear market. Equities, 20%, 25% is a bear market. So it's typically double. So we're definitely in a bear market, but the impact of the halving is half every year, and now it's negligible. So one big buyer comes in and buys a ton of supply, that's nearly has the impact of a halving. So I think that's going away. The 4-year cycle is dead as far as I'm concerned. So great question. Chlovado Crypto, would you buy a non-tech related stock that could benefit from war? No, I don't invest in things that do bad. That includes war machines, that includes cigarette companies, that includes Coca-Cola, that includes evil banks. Some evil banks, there are some good ones. I bank with a good one myself. But from that perspective, no. But there are ways of playing it, like energy stocks. They will do well. So if you know anything about oil companies, they make far more money when the price of oil is high. It defeats logic, but that's what they do. When the price of oil is low, they make nothing. So even though the gas stations never, the price of gas at a gas station or petrol station never reflects that of the actual price of a barrel of oil, which is funny. Trust no one. Excluding Bitcoin size, why do you think Grayscale ETF fulfills SEC ETF requirements compared to others already rejected? What is the SEC looking for? Great question. So I'm going to answer that a few ways. One, Grayscale have 650,000 Bitcoin, which is a huge amount of the supply. First of all, they can't ignore that size. Second of all, when the SEC approves a spot ETF, they'll do what they did with the futures ETF. They'll approve 3, 4, 5 of them all within 1 or 2 weeks. So the first one to go will be the biggest one, Grayscale, quickly followed in 3 to 5 days by a second one, like Valkyrie or Fidelity or something like that, and then whoever the third and fourth, fifth, maybe Galaxy, who knows. I know ARK Invest, we're trying to work with a couple of names, and they have a huge amount of influence over the regulators. So Wall Street have a huge amount of influence. That'll come to the fore. I just don't know what's going to happen now. There's so much uncertainty, especially if the inflation problems persist and war persists and all of the unknowns. That'll bring more delays. There's also some rumors coming out now that, my projection of June 2022 is probably not going to happen. I'm still optimistic, but we'll see. But that's what I see happening, and I hope that helps. So it won't be one spot ETF, it'll be 3 to 5 at the same time within 1 or 2 weeks. And thank you for your donation, Senor Butch. It's just Sky. Just made it to half a Bitcoin at 22 years old. That's incredible. You got your whole life in front of you. Very impressed. I'm excited to see what the next 10 years have in store. Yes, but keep your security safe. I'm so happy to hear. I love when young people are so good at investing at such a good age as well. Zach Crane, my wife made my face NFT thing. If you want one, I'd be happy to get one to you. Yes, thank you, Washmas. That would be cool. That'd be really cool. And Desert Dog, Rambling Roy, Beatty McGee, D-Rock, Jeff Hammer, and Haswell. Thank you, everybody. That's a wrap. I just hope war doesn't escalate anymore. Bitcoin just tanked again. One of the few times where we stream and Bitcoin price goes down. It's terrible, but we're at that kind of crazy support level we've been at all day of around 37,000. So we'll see. Expect more bumpiness until we can get clarification on where this war situation is going and the impact. But I do expect more turbulence. So sorry to leave you with that grief tiding, but I'll see you all tomorrow. Thanks all. Bye.